Right. So next one, QRP Lifecare Private Limited. The company or QRP is engaged in the manufacturing of pharmaceuticals. The company is based in Hyderabad and has an annual turnover of 400 crore. One of the directors of the company did not give the declaration to the company under 164.2 as at 31st March. The auditors of the company have completed their audit for the financial year 31 and are awaiting this declaration. But the management is of the view that they will not be able to receive this declaration. All the other directors have given the declaration, and the auditor has also verified that, right? So 143.3, whether any directors of the company are disqualified under section 164.2. QRP had given an advance amounting to 50 crore to its subsidiary RPS on 12th of Jan for carrying out certain projects. The net worth of the subsidiary has eroded substantially as on 2031, and looking at the future projections, there is no certainty in terms of the profitability of the subsidiary. QRP has a subsidiary SPS Limited in UK. The company had outstanding trade receivable amounting to 10 crore from SPS. QRP has observed that there have been some FEMA non-compliance on the part of QRP, but the management has an action plan which they have initiated, and on the basis of which management is sure that the non-compliance would be done good and there would be no penalty on the company. In case the penalty arises, the impact would be significant for QRP. The auditors of QRP have evaluated this matter by involving a regulatory matter expert and also agree with the management's view. QRP was using a customized ERP package up to 30. However, from 1st April, QRP moved on SAP ERP package considering the increase in the size of the operations of QRP. The auditors of QRP are of the view for 31, being the first year of SAP implementation, no work on IT control would be required, and they were also evaluating to qualify the report on IFC because on the basis of their experience on other clients in the past where IT controls in the first year of implementation were found to be weak. Okay, no work on IT controls was required and straight away qualify the report in the first year regarding IFC. On the basis of the facts, answer the question. How should the auditors of QRP deal with the matter relating to non-receipt of declaration under 164.2, disqualification of director of the Companies Act? Auditor should perform some alternative procedure. If auditor has been able to verify that all directors except one have given the declaration, it should be ignored by the auditor, ignore the option. There is no reporting implication due to non-receipt of declaration. Auditor should issue the clean report in respect of this matter. However, auditor should insist the management to provide the declaration later on. Storytelling. Right? Auditor would need to report this matter in their main report under 143C, reporting on the other legal regulatory requirement. Okay. How should the auditors of QRP deal with the matter relating to erosion of net worth of one of their subsidiaries? Is there any reporting implication for the same? In respect of QRP, there is no reporting implication on the part of the auditors of QRP due to erosion in the net worth of RPS. This matter would be relevant to the auditors of RPS. No, it's your subsidiary. In respect of QRP, auditors of QRP would need to give an emphasis of matter paragraph in their report, considering the uncertainty involved relating to profitability of RPS. In respect of QRP, auditors would need to give a qualification in respect of non-recovery of advances from RPS if the adjustment entry is not recorded in the books. In respect of QRP, auditors of QRP would need the management to include a note in the financial statement explaining about the recoverability of the advances. So no reporting implication, emphasis of matter, qualification, and management to include a note. What will be the correct thing? Qualification. Right? Need to give a qualification in respect of the non-recovery of the advances. Do you agree with the way the auditors have handled the matter relating to the FEMA non-compliance? How would you deal with this matter? Auditors didn't handle this matter appropriately. Auditors should have informed this matter to the RBI within a period of 30 days from the date this matter came to their knowledge. Like how you report fraud to central government. Here it says you have to report the FEMA non-compliance to the RBI. No. Auditor handled the matter appropriately. The management would need to include this matter in the notes to account. Auditor handled this matter appropriately, but they would also need to include a modification in their report. Yes, their report, because the impact of penalty if levied can be material. Auditors could have handled this matter in a better manner by also involving a tax expert. They involved a regulatory expert, no? Regulatory matter expert. So it says tax expert, right? Because this might result in penalty that could have some taxation impact. Oh my God, that is too much of stretched thinking over there. Right? So what does it say? Auditor handle this matter appropriately. The management could include this matter in the notes. Okay. QRP has been preparing consolidated financial statements, but they did not consolidate the financial statements of SPS every year. This is because the financial year followed by SPS is Jan to December as against April to March of QRP. The auditors have also been fine with this position of the management of QRP year on year. Please suggest. QRP needs to prepare consolidated financial statements by consolidating SPS. If this is not done, auditor needs to qualify their report. Non-consolidation of subsidiaries. QRP needs to prepare consolidated by also consolidating SPS. If this is not done, auditor should give an emphasis of matter. QRP management view is right because SPS is a foreign company and consolidation is required only for India. Auditors of QRP should have done materiality assessment in respect of non-consolidation. Auditor should ask the management to include a note and take representation. No so much drama. Right, so what does it say? QRP needs to prepare the consolidated by also consolidating SPS. If this is not done, auditors need to qualify their report on the CFS. Do you agree with the view of the auditors of QRP regarding not testing control in the first year and straight away giving a qualification in IFC report? What would be your suggestion here? Auditors have precedence on this matter as they have on which they have formed a view, and that is completely acceptable, completely non-acceptable. Auditor would need to document this properly in their audit file? No. Auditor need to perform the procedures before forming any view. Any such precedence of other client cannot be taken for QRP without performing any procedure by the auditor. Auditors have precedence on the basis of which they form their view, and that is fine as far as they don't want to test IT control. No. This is your professional work. However, to qualify the IFC on the basis of precedence may not be appropriate. Okay. Auditors have precedence on this, and on that basis they formed a view, and it is fine as far as they don't want to test. We are not fine with that. So auditor need to perform the procedures before forming any view. Any such precedence of other client cannot be taken for QRP without performing any procedure by the auditor.